Investors are getting rug pulled yet again. And we're not talking about the latest meme coin that Kanye dropped yesterday, dumping 70% in a matter of 24 hours, nor are we talking about retail investors getting absolutely crushed in the last 7 days, piling into ETFs towards the tops. We're looking at something much, much bigger than all of these things combined. And this is going to have an effect on Bitcoin. It's going to have an effect on Ethereum. It's going to have an effect on the stock markets. And this is something that is also going to have an effect on the altcoin season, something that retail investors have been absolutely dying for. And that is, of course, the interest rate announcements. Day by day, we continue to see the probabilities decrease for an interest rate cut coming up in September. So in today's video, I want to have a look at how that's affecting the cycles, what's happened over the last 24 hours, and of course, fill you in on the macro cycle here on the channel. I'll cover the real estate cycle, Bitcoin, Ethereum, cryptocurrencies for that mega altcoin season, stock markets, and of course, commodities as well. So if you find value from the videos, share it with a friend, hit that like button, subscribe to the channel. Bitcoin down 10%, $12,500. We're getting much, much closer to the 50% level, which is the area that we think there is a date with destiny for Bitcoin when it comes to 50% levels. It absolutely loves to hit these levels, and so that's why we use them as support and resistance. Being able to draw them on your charts, super important, from extreme lows to extreme highs in the time frame that we're watching. And so the shorter time frames are going to have much less importance on the macro view for the market. The longer term 50% are going to have a much bigger impact. So we're currently just at the shorter term move, basically the last move from the June low to the current all-time high, getting very close to that level now, $111,000. So as long as Bitcoin can remain above this, much, much stronger. If it drops underneath, still an okay position, but the correction is just going to last a little bit longer than what many, I think, are anticipating. This last correction here was 20 days, and this one where the arrow is, that one was 31 days. So at the moment, we're down 7 days. And if we look at somewhere in between, we're probably now closer towards that 2 to 3 week type of correction underneath this all-time high price based on the current price movement, basically the correction to the downside. And so if we start to extend out, we could look between that 2 to 3 weeks, maybe somewhere out to 4 weeks, which is what has happened last time. Ideally, it's less than that, which is what this line is here, and that the price isn't below 110, 111,000 by that time. We get some spikes down and some consolidation, that's okay. But if it's continuing to fall by that period, then we would have an overbalance in time and price, meaning that this correction is longer and deeper than that last correction, which means it's now going to look back to the next correction. So that's definitely not what we want to see for the bulls to the upside. And so for the timeframes leading into this, we're looking at the cycles here going back 5 and 10 years because we saw significant declines in that period in 5 years ago with the COVID dump. And so the market has been playing ball to this cycle pretty similarly for this entire move up. Plus we have seasonality that it also shows August and September can be a little bit weak. If not one, then the other is going to be weak, and you get that choppy consolidation until hopefully the good news turns around again and we start to see some higher prices, which is what both of these cycles are looking at, the 5 and the 10-year composite for Bitcoin. But in terms of this rug pull that's going on, I don't think it's going to be the end of the world. We've seen a lot of retail purchasing, which generally isn't a great sign. However, there are some other good signs that are still brewing, even though this period of the market is looking relatively choppy. Now, retail purchases are the highest they have ever been in the first half of the year. Cumulative net retail purchases by calendar year, 155 billion. It outweighs 2021 and 2022 by a few $1 billion. And at that time, we did see a lot more money printing going on. But we also have in the background, Jerome Powell, the market not sure what Jerome Powell wants to do here. He's got the speech coming up in a couple of days' time. This time in 2022 was also a pretty critical time for the markets. They weren't sure whether we're going to get even more interest rate hikes or cuts. There was fears of both going on. There was interest rate hikes because of all the money printing that had happened, and we got the hikes, but the market continued higher from that point. We saw further upside for the S&P 500 after all of those hikes back in August 2022. So it doesn't mean just because there are hikes, the market's going to be weak, just because there might be cuts, that the market is going to be strong. The cuts could actually be even weaker for the economy. And it looks like Powell is doing what he needs to do to at least maintain the economy where it is and ideally see some further upside for the stock markets. He's obviously taking into account the inflation that has come through as well. And in terms of what the market is anticipating, now they're starting to flip and we're beginning to see the yields also rise. The 2-year yields have risen. They've come up from 3.67 now up to 3.8. The 10 years have gone from 4.2 up to 4.33, and the 30 years have gone from 4.8 up to 4.9. So he's holding strong here for the economy because of the inflation that has also risen. We've seen the core inflation the last couple of months that had risen. This is year over year. We saw the PPI also go up year over year as well. That was a big jump from 2.3 up to 3.3. The yields have continued to rise, which is a tough one for Powell to be able to lower the rates because the market is factoring in everything else that Trump isn't really paying attention to. He wants to see the interest rates go down to help the everyday person, obviously get more votes, and also reduce the debt, the interest payments on the debt. And this is your world clock here. Ton of debt. We know that continues to rise, and we know the money printing continues to increase as well. But Powell's job is not about that side of things. His job is to look after the economy, and if he's seeing the inflation continue to rise, then there's no real reason that he can cut the rates, even though it's starting to hurt the everyday person. On the back of that, the bonds have continued to hold here, and the yields have also continued to rise, while there is obviously worrying signs of this interest rate actually going to get cut. And that's what we've been covering now for many, many months here on the channel. It's been 9 months since the interest rates were actually cut, and 12 months since the cutting cycle, if we can call it that, had begun. But overall, historically, these interest rates are relatively low. Therefore, there's probably still more upside in this cycle to go. We can still withstand the interest rates at these levels for the time being. And that's what we've got here with the winner's curse phase of the 18-year cycle as we run up into the highs. The interest rate increases have actually been a good thing for this second half of the cycle. We've seen the interest rates rise and real estate prices continue to go up. That's all happened, and that's what we had been forecasting based on the 18-year cycle. That's what the cycle has said for decades upon decades. So it's important to keep watching this. On top of that, the money printing continues on for the US. Therefore, there is still the chance that we'd see further upside because there's more liquidity still in the game. Although the problems are in the background with the yields rising, the inflation rising, the bonds lowering, the US dollar holding out where it is, but also in a macro downtrend, there is still not the final cracks to knock this thing right out of the park into the collapse. We haven't seen those come to fruition yet. We're still very much in the winner's curse phase. Now, although there's a lot of money printing going on, a lot of fears that this isn't a great thing for the economy because it continues to increase the inflation. On the flip side, we're interested in asset prices going up. That's what we discuss on the channel. That's why you're here. This still is not at an average level going back to the 1960s, going back decades ago. The majority of the time, it spends its time year over year above 5%. Now, we're not that far off it. And as we can tell, quite a lot of these signals are getting very close to their peaks, where you're starting to see things really get out of hand. But of course, markets can remain irrational longer than we can remain solvent. And that's why we continue to follow the cycle to the upside, even though everything seems absolutely way overvalued. Now, of course, that doesn't mean the short term can't consolidate. We've discussed many, many times about Q3 looking like this period that the market needs to consolidate all of these gains that it had through Q1. We got to July, put in some fresh highs, and now the price is basically within a trading range between 6,200 and 6,500 for the S&P 500. And in that same period, Bitcoin has risen up. July is roughly started around 107, 108,000, and now the price is at 112,000 after, of course, hitting above 120,000 for a few days there. So it's in a similar sort of range. It is range trading between 100 and 124,000. Of course, there's much more volatility than the S&P 500. We did see the signal, talked about this over the last few days. This is our 3-bar signal from key turning points, and this may also lead to further consolidation on the charts, which, as I pointed out, might only be a short-term thing until we get into quarter 4. Quarter 3, in terms of the cycles, this is a new one we're looking at here. Post-election years, August, September. Here is quarter 3. Here is quarter 4. And the post-election years, we can see that it does have a bit of a pullback. But typically, it's not going to go that far, especially after such a significant correction that we saw in the first quarter that ended in the second quarter of the year. So with the large corrections, the next corrections typically aren't as deep, especially if they've gone above the previous highs, which is what this market has done. So some time off here, consolidate. Quarter 4 still looking pretty good on the other side of this move. The 10 and the 20 year looking pretty similar, lows here for August, and then late September, early October. As for crypto, it's also died off. The Google trends here, the words crypto, Bitcoin, Ethereum in your blue, red, and yellow have definitely died off day after day, pretty much just updating here that we haven't seen a turnaround yet. Ideally, we see the turnaround because each of those turnarounds in the interest has led to the price escalating. Now, if you want to get in before that price escalates, got to be watching out for these higher lows. And that's what we've seen through these periods. The market puts in higher lows, pushes a little higher, comes back, cools off, then starts to put in a higher low again before it breaks out to those highs. So this is looking at it in a short term, looking at 90 days. Keep a look out here for if this starts to turn around over the coming 2 to 4 weeks. As I pointed out earlier in the video, looking at these particular timeframes on the macro charts, on the basically industry leaders. The exchange volume is showing similar signs, basically cooling off here for the altcoins. Slightly lower highs, higher lows, basically just means that the interest has died off for the market. Now, while we're waiting for these sorts of altcoin seasons like we've seen in 2021 and 2017, there are definitely still good trading opportunities, stuff that we share with our members. Link to TIA Premium is in the top of the video description. It's $100 off there as well, plus the weekly reports that come out. And the buy and hold strategy just isn't working at this stage. It's basically quick trading, quick rotations between coins and watching where the next support and resistance levels are. Basically short-term trading. The longer-term stuff, I think, is going to play out if we can see a break above 8, and more importantly, this level right here, this 10 to 10.5%. There is a lot of resistance at that level, around the 10% for the others chart. So basically all of your altcoins, excluding that top 10, which is the large caps, stable coins, Bitcoin and ETH, and a break above right there, 10 to 10.5. That is where you're going to see the old school type of altcoin seasons. Without that, this is going to be a trader's game. So anything in between here, between the 6 and 10%, it is a trader's game. And that's what we've seen almost through this entire cycle, barring that period in 2023, second half of 2023, running into that top of the first quarter of 2024. Now, altcoin season on the total 3, which is minus Bitcoin and ETH, divided by Bitcoin, you can see we're near some sort of bear market low, but we still haven't hit those particular levels. The rally at the moment is okay. We haven't got to the potential altcoin season, and this is just pointing out where the previous altcoin seasons were as well. That's that huge run up from the bear market low 2017 and 2021, lasting 5 months and 3 months. Now, of course, there are others in between. Different altcoins are going to pop off, but if it's going to be something pretty broad where a lot of altcoins are going to go crazy, it's got to be something similar to those, breaking past the resistance levels that we can see through the middle here. And at the moment, it's still a little way off that. So anything up to that level, like what happened in late 24, is essentially going to be more trading. So shorter term trading there for those altcoin gains. The USDT dominance, basically still trading underneath 4.7. So the simple theory here, my simple theory is a breakdown of that level there, roughly around 4%, could lead us to 3.7. So that's going to be a lot of stablecoin dominance lost going back into Bitcoin and the strong alts. Otherwise, a move back higher here to 4.8. That one there is obviously going to crush the market, and anything above that level closing on a closing basis is basically going to say that the cycle is over. The reason why we've got overbalances in time and price here, you can see this range to the upside, 0.9 and 30 days, which means from this low, 0.9 and 30 days is a reading of 4.9% by mid-September, which is roughly around the interest rate announcement. The overbalance in time and price is one of our key trend changing signals, something that lets us know that the market is getting ready to reverse before the majority of the market sees it. We used this at the lows for Bitcoin back in 2022 and 2023 as it began to break out of those lows. And if anyone was around the market at that time, you'd remember that there was all talks of recession fears for over 12 months that this market was going to collapse. Lots of talk of Bitcoin going to 9K, 3K, stock markets below $3,000, and it didn't happen. And the overbalance in time price really did help because it was showing us what the investors were doing at that time. Essentially, the smart money, the accumulation, the early money at that time. So that is something that we talk about on a weekly basis with our members. There is a link to TIA Premium in the video description if you want to learn more about that for your longer term portfolios, or if you want to use it for your short term trading, like I'm showing you here with, in this case, Bitcoin dominance and that potential altcoin season. So we're not there yet to the level, and we haven't got the breakdown of the swing and the 50% level yet. So there are the two key metrics we need to see hit for this trend change to occur. Bitcoin dominance is looking a little more favorable here overall because of the time frame to the downside, but you can see it's come right to the price level and is not broken yet. So it's basically flirting with the idea that it wants to break down from this point. In the meantime, Ethereum is also holding ground above the previous resistance, now becoming some sort of short-term support, which also lines up very well with, you guessed it, the 50% level. There it is at 4,075. This is a short-term 50%. As we've been covering, the correction to the downside is now likely going to be longer than the previous one, which means we look back to what happened in the last time. So on the short-term basis for Ethereum, we're watching over the next week or so, but I think it's probably going to take more so that 2 to 4 weeks based on everything we discussed in today's video, looking back at the interest rate announcements and the cyclical patterns, especially after such a massive move and the retail investors getting absolutely crazy hot with the ETF inflows towards that peak. You can see here was 1 billion inflows and then 500 million, over 500 million, another 500 million, and then basically it all came crashing down on their head. So it's this little metric here right at the top. They came piling in yet again towards that peak. And now, of course, it's all cooled off from that level. So it's going to take a little bit of time for all of this to reset. And like we can see on the Crypto Fear and Greed Index, along with the FOMO Finder, we're not really at 100% reset, but it's looking a lot more favorable now. It just needs that extra bit of time like we've seen in the past. This period, roughly 2 months. This period, roughly 4 months. But something on a shorter term is more like your 2 to 4 weeks because of the stage of the cycle that we are in. Speaking of the stage, Ethereum BTC looks like it still wants to push a little higher. We're sitting at around 4%. And like I've pointed out, I'm targeting somewhere around 5 to 5.3% for the end of the cycle. We'll know a little more if ETH can break through the resistance here at 4%. And the 10-year resistance line also at 4%. That'll give it a bit more room to run into the 4.5% and 5% valuation of Bitcoin. But to keep it simple, 4% is the resistance at the moment. A breakout of 4, we're looking for a cycle endpoint somewhere around 4.5% to 5.3%, which brings us up to the bear market 50% level. And like we know, markets love to come back and test 50% levels. Speaking of which, XRP has continued down again, $2.86. Its 50% level for this range to the upside now is at $2.86. $1.63. That was the previous high as well. So that would be quite weak if it was to break underneath the previous swing top and below the 50% level. So really, really important now for XRP over this period that we're discussing about the markets consolidating and finding strength, or do they start to find a little bit of weakness? Even if they're to rally into the end of the cycle, a breakdown here is just going to not give it the fighting power to the upside. If it can remain above 260, this is the strong level, and that's going to give it a better chance to push higher. Otherwise, underneath, it's going to obviously be there's a higher probability it's going to be a weaker move to that upside if it can get back to the $3.40 and $3.60 level. And Bitcoin's cycle ending price targets are still intact. We're still looking around the mid 130s for now. August, at the moment, with 10 days to go, could still be a red month, which could lead September to being that green month and a nice push to the end of the year into that Q4, October, November. Now that seems to be the highest probability at the moment, the market consolidating here before that final push to the upside. But of course, anything can change, especially with many or multiple closes above the 7-year resistance line. Hit the like, subscribe to the channel, link in the top of the video description for $100 off premium and the free reports. And if you want to check out a few of my surfing videos from my latest trip to the Mentawise, my Instagram link is down below. You can give me your coaching tips on how I can improve. It's been a few years in my late 30s, getting there, but I need a lot more improvement. Thanks again, guys. Take care, and I'll see you at the next one. Cheers.